agree more with my colleague from Georgia. It's time that we get off of Capitol Hill and we get out of into our small communities. I come from a region where the tourism business is very strong. Our number one industry. It promotes the economy in our area. To see the Great Smoky Mountain National Park, the Blue Ridge Parkways. The problem that a lot of my small businesses are having now is during the off season, if you will, through the winter time when we don't have the tourism, they're usually dependent and relying upon these lines of credits to be able to pull their businesses through the shortfalls in the wintertime until the spring, the summer, and the fall picks back up. What is being done, let me give you a little bit of a history. A lot of these lines of credits now are being called. They haven't been tapping into them for the last 9 months. Therefore, the bank just said, let's just go ahead and call those back. Now they don't have access to these lines of credits. We saw a slowdown because of gas prices. We saw a slowdown in our region based upon the tourism industry. So we saw about a 20% decline in the overall visiting the parks. Therefore, we've seen a lot of that in our small business. We had a lower, their bank statements, their K1s are certainly different this year than they were a year or 2 years ago. What is being done to ensure that these small businesses can have these lines of credits through the tough times in order they can get back on pace once the economy picks back up, or in our particular situation, the season picks up?
Once again, that was a very good question because it brings up a number of topics that are related. I mentioned earlier Mountain First Bank in Hendersonville, North Carolina. I believe that's in your district, where we recently granted $200 million to a small bank with 165 employees. It's been there for quite a while. We believe these type of loans are going to filter down to the community, and we are actively looking to make those type of investments. Let me also step back and mention, back in February and March, Congress, along with Secretary Paulson and the administration, passed a $168 billion stimulus program. While at the time that was viewed as small or perhaps early, given the high energy prices and given what happened to gas, it was particularly timely, in some ways preventing us from an earlier potential problems. Every $1 drop in gas prices equals roughly $100 billion in additional stimulus. So I would imagine this will also filter down to small businesses. When we look at other companies like, again, in your district, I believe it's Thermo Fisher and BorgWarner and a lot of other smaller firms out there who depend not just on tourism, but other industrial businesses, we want to make sure they can meet payrolls, they can get loans, and they can make sure that they function on a day-to-day basis. These capital investments will help that. And once again, I mention again, 31 days since we've been out there doing this, it will reach many, many firms in your district and others.
I agree very much that it's very important to get out, and I've been trying to do that as much as possible. I've been to a variety of cities around the country, Cincinnati, Cleveland, Atlanta, Boston, Philadelphia, and quite a few others, where they're facing tremendous challenges in the housing markets and for small businesses. And so I think it's extremely important to try to provide the macroeconomic support so that there's sufficient demand for the small businesses. You had mentioned that your area has a lot of tourism, and that tourism demand has been going down. Unfortunately, demand has been going down in a lot of different areas. And so perhaps one of the most effective tools that the Federal Reserve has is monetary policy to try to provide some stimulus to the economy, or at least some offset to the reduction in demand. And as you well know, we began cutting interest rates more than a year ago, and aggressively did that in January of this year, and have done so again over the last 2 months. So I think, as a complement to the specifics of trying to restore confidence in the banking system, provide liquidity to the system, so that the banks have the wherewithal to be able to lend, providing that sort of macroeconomic support is extremely important.
Madam Chair, I know I have just a couple of seconds. So how long can I tell my small businesses and my community banks that they're going to see relief? And we're talking about business days here. How many more business days is it going to be before I can tell my small businesses, hey, it's a trust factor, and that's the reason I didn't vote for the bailout. I didn't trust it. and now they're not trusting the system as well. How many days are we looking at?
I can guarantee you that civil workers and ourselves and our staffs are working night and day to ensure that we get through the applications that are coming through all of your districts to ensure that they get the credit they need. I can't put a date, and I won't speculate on a date for it, but again, as the bank in your district has noted, we do act, and we will act aggressively.
I guess, Mr. Schuler, that we all should feel very good about the fact that a bank in your district, a small bank in your district, got $200 million, while the biggest bank got $290 billion. And my frustration here is still there's 6,000 community banks, small banks out there that have not seen any money at all. And they're struggling because they lack liquidity at this point, since it's not trickling down like you promised us. I will recognize now Mr. Gorman.
Thank you, Madam Chair, and I also appreciate having the hearing, and appreciate y'all coming up here to the Hill. We, of course, back in the late days of September, saw and heard plenty from Secretary Paulson and Chair Bernanke. But anyway, I would like to, identify myself with the comments of my colleagues. I think it sounds like this is very bipartisan in our feelings on this. But I would hope that the Treasury Department, of course, your days of this, the leadership in this Treasury Department are coming to an end, but I hope there's been some valuable lessons learned. For example, when the Secretary of the Treasury comes out and says in private conference with members of Congress, when he knows information is going to go out, and says publicly, gee, we're about to have a stock market crash, a depression, this terrible economy, it becomes a self-fulfilling prophecy. It does. And I hope that people will learn from the mistakes. Our economy in East Texas, much of it rural, I was constantly checking with home builders. We never overbuilt. We didn't have the explosion in growth, so homes were modest price, and home builders were still going good until the crying out from the Fed, but especially the Secretary of the Treasury, who should have known better. You can't go in a theater and scream fire, and especially you can't go in a theater, lock the doors, and say, if you don't give me $700 billion, you're all going to go up in flames. You can't scare a volatile market like that, because what has happened now in my banks where they had plenty of money, they're hesitant to loan it, because they want to see if Secretary Paulson knew what he was talking about when he says, we're in big trouble. Oh, it's going to be bad. So everybody's frozen their credit. We have people who were September was not a bad month for car sales in my district until Secretary Paulson goes out and scares people, and they begin to say, gee, maybe we better not buy a car right now. Builders were saying after Paulson went public, then they got calls saying, we're going to hold up building right now because the Secretary says we're in for a big depression unless you give him $700 billion. And I know it may have been a shock to some, like Secretary Paulson in the administration, that people actually believed him because of some of the past things that have been said and done and occurred. But people did. They said, we better wait and see if he knows what he's talking about. You can't scare the stock market like that. And then we had people coming up here, economists, saying, well, gee, fix the mark-to-market rule and you don't have to lose these banks. And then the Treasury Secretary telling us that, gee, once these banks start falling, it's going to be dominoes. You can't stop them. Well, there's self-fulfilling prophecy in that. But the other thing, I hope there was a lesson learned, and I would like to think that there was nothing in the way of mens rea behind the comments. But when the Secretary of the Treasury says, we're in an emergency situation, but we're going to stand good for every dollar in money market accounts, And over here in the most solid area, not the investment banks, but the